Hindu Undivided Family or HUF can be a great tax saving tool if there is an additional business income or if there is a rent from an inherited property. However, it is a slightly complex structure. To form an HUF, you need birth of a child. While a family begins after marriage, but for the purpose of taxation as an HUF, you need a child. Why this condition is necessary? Well, you need at least two co-partners for an HUF to be considered as a separate taxable entity. And wife cannot be a co-partner because only those that are born into the family are considered co-partners. Why HUF is beneficial? Well, HUF is a separate taxable entity with its own PAN number and separate deduction and exemption limits. For example, an HUF can pay premium on life insurance or medical insurance for its member and can claim tax deductions. At the same time, an HUF can contribute towards the PPF account of its members and claim tax deductions. However, an HUF cannot open PPF on its own name. Any two properties held by an individual can be considered self-occupied where the tax outgo will be nil. Now, any two HUF properties can also be considered as self-occupied, leading to significant savings in the tax outgo. Here is an example of how much tax can be saved. Individual A earns rent from an inherited property and has a salary income. After all the deductions, his net taxable income works out to be rupees 23.25 lakh and total tax outgo works out at rupees 5.3 lakh. On the other hand, individual B has only his salary income in his own PAN number. The rental income is in HUF as the inherited property was willed to the HUF. Now B's net taxable income is rupees 18 lakh and HUF's net taxable income is rupees 3.75 lakh. Their total tax outgo works out to rupees 3.73 lakh, translating into tax savings of rupees 1.57 lakh. However, funding an HUF can be challenging. An individual member of the HUF cannot simply transfer an asset or income to the HUF, as income from such an asset would be taxed in the hands of the individual member due to the clubbing provisions. So you need to find alternatives. For example, gift from a non-member will not trigger clubbing. Loan is also an option, but check with your CA to ensure that there is proper paperwork so that any tax related inquiries can be avoided.